we see another opportunity to buy. Despite numerous chances for prolonged downturn, 2024 has turned out to be a year of robust market performance. Although I am aware that yesterday's fall was quite painful, I believe that the equity's underlying fundamentals are sound, and I believe that investors have a wonderful opportunity here. What does the group's largest laggard, Nvidia, tell you about a tech rotation going into 2025? The theme, and part of our theme, which has been essentially the same throughout 2024, and we believe will continue into 2025, is first and foremost that you're likely to continue to see these really aggressive rotations into and out of groups or sectors. The chart kind of puts an exclamation point on this. I think you're beginning to see this larger dispersion even within groups, whether it's the Magnificent Seven as the other 493, or whether it's tech and communication services at the expense of the rest of the market. It is remarkable that you would look at just the Magnificent Seven and see that the performance gap between Tesla and Nvidia has increased, even over the last month. However, it is almost disproportionately driven by one or two names. Given that the largest corporations are not always the best performers, I believe that to be a more significant subject to remember. As of this year, Nvidia continues to rank as the S&P's second best performer, while Microsoft is, I believe, in 200th or 205th place. In terms of the group they belong to, there is a significant difference between two businesses that are nonetheless referred to as magnificent. And I only look at performance, I don't cover the stocks. However, it's simply examining the notion that there are alternative chances available, which can occasionally be made worse by some of these rotations that you frequently encounter, most notably the one that has occurred in the last month. Today, we're examining chips, paying particular attention to Nvidia's stock, which is experiencing a slow run. The stock is currently down over 10% from last month's record closing. Are you curious about the record close time? Election day coincided with its record close, and Nvidia has been struggling ever since. In actuality, it has now dropped by far over 10%. It is approaching 11 to 12%. Every member of the Magnificent Seven has been higher. Therefore, if you look at the Magnificent 7 ETF, it's up. They're all up if you look at them all, but especially at Tesla, which has been the clear winner. In the case of Nvidia, one of these things is not like the other. I asked Nancy Tengler, a very astute investment strategist and Nvidia bull, about this and what she believed to be the cause of it when we recently met with her. One of the ideas I bounced off her was, is it possible that Nvidia is going through a product transition? What if that clarified some of the weakness? In essence, Nancy told us that she believes the market has a short-term memory. Because I believe her main point to us was that Julie, she looks at Gen I spending, and it's still running very strong. She really told us she was exploiting this vulnerability to strengthen their position over there. Like many others, she wagers that Jensen Huang will benefit if that is the case. When compared to Nvidia, which was up 24% on Friday after its reports, Broadcom has been the market's new hotness over the last several days. Today, it's up by double digits once more. Indeed, analysts' reactions to Broadcom's results were outstanding. What's fascinating, though, is that if you look at the projection for the upcoming year, you'll see that both Nvidia and Broadcom are stock picks for 2025, according to analysts Stacy Raskin from Bernstein and Vivek Arya from Bank of America. According to John Vin, who I spoke with on the phone today at KBank, there appears to be a perception that consumers have been anticipating the arrival of the bespoke silicon wave. Broadcom is viewed as a major benefactor of the hyperscalers or other businesses starting to create and have their own bespoke chips, especially after its report. He also believes that it's too soon for the market to undergo this significant change, even though people have been yearning for it. To demonstrate their admiration for Hock Tan's business, 25 analysts have upped their price targets by an average of 19%, according to Bloomberg statistics. No analyst downgraded or lowered their price targets for Broadcom. The 12-month goal is at $232. Yes, and what's really amazing about that is that the company's earnings match projections. The discussion revolved around artificial intelligence, the entire addressable market for the bespoke chips we are discussing, and how it will benefit Broadcom going forward. However, it also provided a wide range. By fiscal year 2027, the AI market might be worth anywhere from $60 to $90 billion. The range of $60 to $90 billion is quite large. You brought about Stacy Raskin, who raised his goal to $250. Stacy sort of told his clients that, in his opinion, Broadcom was the best option because, in the end, the AI story there seemed to be really coming together for Hock Tan, and many others clearly agreed with him. What's going on, Arjun? Why is Nvidia showing such weakness while Broadcom is actually becoming stronger? Let's break this down and begin with a few statistics. Broadcom's revenue increased 51% year over year to slightly over $14 billion in the most recent quarter. In contrast, Nvidia reported revenue of slightly over $35 billion, a 94% increase from the previous year. Investors are currently supporting Broadcom despite the fact that it trades at a higher forward P/E than Nvidia. I believe there is a perception that investors are searching for the next Nvidia, the business that can ride this AI wave and provide them with disproportionate profits. Thus, some of that rotation is taking place there. However, it's also critical to understand that Broadcom and Nvidia are not always comparable. Large AI models, such as those produced by OpenAI, have been trained using GPUs, which are developed by Nvidia. There isn't a serious competitor in this field yet. Broadcom, on the other hand, has primarily concentrated on creating specialized AI processors for hyperscalers or major cloud providers like Google, Amazon, or Microsoft. Even though these hyperscalers still require Nvidia processors, they are increasingly turning to some of the specialized silicon that Broadcom is creating for certain applications. These hyperscalers then use their cloud division to sell those services. Hock Tan, the CEO of Broadcom, recently stated that 3 hyperscale clients have created their own AI chips on Broadcom's platform, which will be implemented over the course of the next 3 years. This is one of the reasons the market is enthusiastic. Additionally, Wall Street has raised the company's price targets, which has contributed to Broadcom's recent surge to more than $1 trillion. We speak about Nvidia being at a somewhat high multiple, about 35 times forward, but it's definitely fair given that growth pace. I didn't question you about it since, in reality, I feel a lot more at ease in this section of the conversation than I did in the crypto debate. By the way, Nvidia is formally moving into the realm of correction. Since its closing high on November 7th, it has dropped 10%. Since we have a move around it, we will discuss a similar stock that is experiencing a truly fantastic time of its own a little later. However, we were aware that these would eventually cease to function as a single entity. They have actually distanced themselves from one another. There have been recent record highs for Apple and Meta, as well as record highs for Alphabet and Amazon today. However, Microsoft and the Nvidias of the world are a little further behind, and they haven't hit. If you require any additional clarity, please let me know. As we can see, there is such a huge demand for Nvidia technology that obtaining the GPUs is frequently challenging. I suppose I'm pretty worried about our ability to obtain cutting-edge Nvidia GPUs when we need them. This, in my opinion, means that we must work much harder on Dojo to make sure we have the necessary training capacity. Not everyone believes that Tesla is close to complete autonomy and that Dojo is the answer to accomplishing this goal, even if Musk did have all the chips he desired. In contrast to many other manufacturers developing autonomous vehicles, Tesla has decided to employ cameras for a vision-only system rather than costly LiDAR devices in its vehicles. The car's sensors are the source of the FSD problems. Drivers of these vehicles, yes, report seeing phantom obstacles on the road where the steering wheel will nudge you away as you're avoiding something that doesn't exist, or the car may abruptly brake. When you picture a white tractor-trailer vehicle toppling over on a gloomy day, you have white on white and a situation that is difficult to calculate and identify. A careful driver will now notice this and apply the brakes firmly. That kind of scenario can easily trick a machine, you know. Therefore, they must equip the cars with additional sensors in order to eliminate it. They have been very opposed to LiDAR. The basic design has to be altered. That won't be fixed by Dojo. Dojo simply won't address the fundamental issues with FSD.